Hi, this is the Oak Trader report on the 15th of December. These charts were prepared on the 15th, but I'm actually recording this on the 17th. Most of these stocks here are in the insurance, property and casualty sector. And the first one up here, ticker symbol FAC. Got a monthly chart here, big downtrends, and then you see the base area coming up. Not a tremendous rise up, and it comes down for another reaccumulation cycle and a huge move up and nice distribution. And if you draw a line here, the downtrend, the steep line has been broken. It showed decent support here and pretty decent low volume action. The stock died a death here, which is always good to see if it then bounces up and shows decent support and then drags out investors' patience. It broke some gradual downtrend lines here as well, and this stock looks like it's shaping up very nicely, and I've been doing some light buying for my portfolio, and I'll be keeping an eager eye on this over the next 6 months. It may well have another setback. With this type of way of trading, you can't guarantee when it's going up. You can't even guarantee it is going up, but the probabilities would suggest, just strictly looking at it from a technical point of view, that the market has been well supported here. So the people who supported the market here, you would summarize they did that for a reason, and I believe that the market will go much higher from here. Over the next 2 or 3 years, I could easily see this stock hitting the $4 to $5 mark quite easily. KFS, I almost said KFC there. You've got a long downtrend line broken here, and you've had some nice bottoms where it showed decent support, and it's risen above that. Not a tremendous amount of accumulation away from the downtrend, really starting from 2012. We could say this was the main pivotal point the technical position is resting upon, and from there you can see the market curving around quite nicely. Got a bit of a flat top developing here. The market's going nicely sideways here, quite low volume action in comparison to this period here, and I'll flick onto the monthly here, and you can see it over a long period of time, the difference in price action. Look at the difference, the wild swings here at the top, in comparison to the tiny movements of the market here at the bottom. And that's what I like to see, not too much action at the bottom, gradual downtrends being broken over a longer term, nice curving trend developing. And I've been doing some light buying for my portfolio in this particular stock, and it's one that I'm going to be looking to hold on to perhaps for the next 2 or 3 years, obviously depending on how price action develops from here. If it does break above the $5, $6 area for a consecutive number of weeks, I will look to purchase more and try and ride the upward trend. Ticker DGICA, Donegal Group, Donegal. Reminds me of Donegal in Northern Ireland. Quite a new stock here, hasn't got a tremendous amount of history. Had an uptrend. When it came out, it had the usual takedown. If it had a little bit of public participation, it didn't look like it had that much, and there wasn't that longer period of time required to accumulate what they needed to push this up onto a nice uptrend here where my mouse is. And then you've got the downtrend that was stopped here by this pivotal point, and the market seems to be curving around. What I don't like about this particular stock, the picture that is, the price action, is these spikes upward. Now this is a very tight stock, a monthly stock based on $1. If that was based on a $5, it would look flatter, but it's still, just interpret it from how the chart looks at this present juncture. The spikes are kind of putting me off, and I would wait till this maybe flattened down just a little bit more, but it does look okay, and it does look to have broken some support here. But I think there's some better options in the insurance and property casualty sector. Most of the sector, the stocks that I've been looking over the last few years, they're all in heavy uptrends. I would say about 85% of the stocks are in quite nice uptrends. Some of them are reaching distribution tops, and some of them have had some distribution. And these stocks we're looking at are some of the ones that what you would call laggards. They haven't gone up with the particular industry for various different reasons. Ticker symbol OB1, Beacon Insurance Group. I like the look of this stock here. Hasn't had a tremendous amount of history. Great time to list, you know, just at the peak of the financial climax there, and then we went through the financial crisis and it reached bottom before the main market, September roughly 2008 rather than March 2009 when the main market bottomed, and it showed decent uptrend support most of the time, people covering their short positions, pushing the market up, and a little bit of support buying as well, and also catching the people out that were short the stock. Again, it showed a little bit of decent accumulation action here, pivotal point here, here and here, so it's curving around, it's looking pretty nice, and you draw a line here, it's broken out, and a line here, it's broken out of that, what you'd call a 4 or 5 month consolidation flat line. And once it breaks, I'd say above these spikes here, you should be looking at a very decent rise. I've been doing some light buying for my portfolio, and I'd suspect that this stock has the potential to perhaps reach around 22 to 24 over the next couple of years. Ticker AFSI, big uptrend here starting in 2009 March when the main markets bottomed, and it's just been a clear run up ever since then from 8 all the way up to a high of 44, and you can see the downtrend line being broken and then the flatter lines being broken on the way up, the technical position changing, the curvature of the market, and a nice uptrend beginning. Usual fake breaking of the uptrend, quite often see that with very steady uptrend movements, they're broken and you have a shakeout and people get worried, and the people who have got some decent profits end up selling out. But if you look at this in reality, this 1-2 here, there wasn't really any distribution. You couldn't really say that this was any sustained period of distribution, and that's why you could have felt perhaps a bit confident with this downtrend being uptrend being broken to have held on to your position, just using logical rules of technical trading. And then it breaks up on the upside here, and you can see it getting steeper, a little bit more of a parabolic move on the upside. It is quite a tight chart and only a $2 parameter, but you have here what looks to be the market becoming a bit more wilder, the price action. So it does look like some distribution here, some wild swings, and this is the point where I start becoming worried. Not really when it has moves like this, but when it has wide swings like this in price, it goes from 44 to 30 in the space of say 4 or 5 months in terms of swings in an area, what you would call a box area. The box areas are becoming much wider, and that makes me more eager to sell out positions and to be more worried about a downtrend coming in this particular stock. It could well move up from here, but I don't like to gamble. I like to, make what needs to be made and then go back in and start the cycle all over again with a decent looking stock, making some very decent accumulation. But again, yeah, it just is looking a little bit of a distribution cycle is developing here. Ticker WRB, just wanted to put this up here. You can see the accumulation action, the move up, the second level accumulation, then the uptrend beginning, and this is the whole reason why you don't put or bet the whole farm on one particular stock, because you can have some great looking actions and they can die a death for a multitude of reasons. Perhaps the people that were looking after sponsoring the stock didn't have the firepower or didn't feel that they could motivate people into the market to purchase what they'd purchased at a lower area, or perhaps with the down markets coming in certain areas around that time, they decided wisely not to try and push it up to unreasonable levels. And you can see here the accumulation action where my mouse is in 93, 95 and back again in 1991. And you can see the big downtrend that came, but the accumulation here, they still hadn't sold out, and that's why you see this huge uptrend developing without a tremendous amount of reaccumulation here, because they didn't need it. And this is what we're going back to before we've discussed it, is patience. You know, a lot of people were buying in 95, 96. They didn't really start to see an uptrend develop to 2001, but it was worth the wait. You know, once a market develops a technical position, it may have a shakeout, and it may be a huge shakeout, but generally a lot of the time the market will turn around extremely quickly, and a lot quicker than any other stock that's had or been involved in the downward cycle of the market at that present juncture. And you can see how this uptrend developed. It became steady, and then became steeper, and then became parabolic. Not too much distribution here for whatever reason again, and then it's come back down. An area of reaccumulation, a sharp spike down, a sharp pivotal point here where you can accumulate quite a number of shares from people who panic and sell, and that's why you see those sharp spikes down. People are just sucking up all the shares that are being sold, and the market moves back up again. And this market doesn't look like it's distributing, and probably won't distribute below the above the $50 level. It's looking like it could easily reach 50 to 55, and I would say it's got potential to spike from here, but that would be more of a speculative position. It wouldn't be, you know, a long-term position trade. It would be something that maybe over the next 3 or 4 months, and then you'd sell out when the market hit 50, 55. MRH, good looking base area here. Some real shenanigans going on in the stock back in the severe crisis of 2008 and 2009. Things became clearer, obviously, and the downtrends were broken, and the technical position of the market, curvature wise and trajectory, has changed. And you can see that the market has begun an uptrend here. I wouldn't be surprised, as we discussed in an earlier chart, to see maybe a bit of a shakeout here from this, as it catches people that are trend followers. They love catching out trend followers, and it's, you know, not a bad way to trade trend following if you're looking at the longer term trends, but they will always try and move the market. An extreme example is was it 2010, the flash crash in May? But that's an extreme example of shaking people out of the market. But these things do happen quite often, shakeouts, and they do catch people out of a good position. But this stock over the longer term, I believe, could easily go to around the $38 to $40 level in the next couple of years. Ticker symbol ACGL. Just wanted to go back and throw you this fantastic example of a base action here. Great accumulation action back in 2000 and 2001, and then breaks up, and this is what we like to see. We don't like to see it completely spike up. It's just nice gradual uptrends, moving up, steady, and then you've had the shakeout again, and then the uptrends become steeper and steeper, and this will end with, I'm sure, a severe parabolic spike upwards, and then we'll see 3 or 4 months of distribution. It doesn't look like that's happened at all, and this looks like it's on a strong upward trajectory, and it's looking perhaps to have a parabolic spike over the next couple of months. Again, this stock is a great looking chart, and if you see opportunities like this in the future, you know, rest assured the market's this flat for a reason. You know, it's not advertising itself. When the market and the people who own the shares here need to sell out, the market will advertise itself with big parabolic spikes, and you'll see lots of positive reporting. No doubt there's quite a lot of positive reporting about Arch Capital Group at the moment, but I'm sure there'll be some good touting pieces coming out in the next 2 or 3 months to try and drag people into this stock a few 100% from where they should have bought a number of years ago. HCI, a great looking base action here on the monthly, and you can see here with the false moves up really testing people's patience. Again, if you see a base action like that, it's really not that long enough to feel positive about buying. Here is the point. When it breaks this gradual downtrend, buying lightly, breaking up, disappointment. Again, you have to be careful of human emotions. Jesse Livermore talked about it. It's the downfall. When this stock's dragging along, you can feel extremely bored and disappointed, and you can feel like you should be doing something better with your money. Again, he talked about moving money around and making use of it, and that's all very well and good, if you want to constantly be on the ticker, so to speak. But some of us would like to try and have lives perhaps away from trading, and it's not much of a life, working 15 hours a day checking tickers these days. And with the Globex markets, like commodities, it used to be so serene, 4.5, 5 days a week. Now it's instead of a trading session of 6 or 7 hours, it's pretty much a 22-hour market a day. So speculation really isn't the way to go, if you want a serene and peaceful lifestyle and to enjoy life, and also if you want to make some long-term gains. There's only a very select few people that can really control their emotions in a speculative environment, and it's a tough challenge, and sometimes it's good to take up a challenge and see if you can achieve that. But I believe that the way of trading, buying in, and if it does drag along for 5 or 6 months, that's the whole point about not putting your whole amount into one particular idea. The whole point is to maybe spread it between 50 to 100 good looking pictures, and there are around the world at the moment numerous opportunities where flat lines are developing like this at the moment. Again, you see a good trend developing here, a good upward trend, and it's gone from pretty much $6 all the way up to 50. And again, it usually takes a lot longer to do stuff like that. But these things do happen from very solid looking bases. They're like springed coils, as they come out of a very tight base, they tend to explode upwards the tighter the base is. Ticker UVI, UVE. Again here, quite a new stock, unsure of its direction. Gradual downtrend being broken here. Not a tremendous amount of flatline action, but there's different types of accumulation action that achieves the same purposes as flatlines. And this is another type, where the velocity of the price action becomes tighter. There is gradual downtrends involved, and as it comes down, the market, it technically changes its trajectory, and quite often you don't see parabolic moves upwards like this, but they do happen. I'm not really a scientific computer programmer, and I have been meaning to pay some guys I know to develop some algorithms, to try and look back in history in terms of different accumulation cycles, in terms of their moves upwards. But I would say, just strictly working from memory and experience of looking at numerous charts in history, I'd say 1 or 2 out of 10 accumulation action cycles will explode upwards quite violently, and this has been a pretty good trade. But you see here, when you've got a move that goes from say 6 to 13, pretty much doubling in price, you've got to think to yourself, is it time to actually check out the story? And that's when you've got to be careful of your emotions getting in there, and sometimes it's difficult to try and judge, from the emotion of reading and looking at the market and trying to judge all the different factors, which is all, it's impossible. And then you've got to try and be strong and then look back at the technical position, and then you've got to try and work out from the technical position, how much did they accumulate, how much did they buy here, and how long is it going to take them to unload what they need to unload, if indeed they do need to unload that much. And there's quite a lot of variables in the technical situation as well, so it's very hard to judge. The only thing that you can judge is common sense. When you've got a decent profit and you're happy with it, sell out. It's a simple way, and that way you don't need particular rules to try and help you out. But the 45-degree trend line, which we've talked about numerous times in the past, is a very good rule, and that's one I would use here. You can see the trend line developing. To me, that would be too steep. Let me just flick back to it here. If I drew a trend line here and put a sell order around 8, an automatic one to sell me out of my position if it touches 8 again, I would prefer perhaps to try and have the sell order around 9. But again, it doesn't really matter where you put it. But if it came down to 8 or 9, it might reaccumulate again, and we'll just have to watch the price action. But it's had a parabolic spike a little bit too early for me. But again, I'm not complaining, and I'll just wait and see. And that is the advantage of putting in automatic sell orders. The only thing with doing that, and it is a fact, and it's not as if someone's watching your hand in poker, but it is similar, because there is computer programs out there that do work for the big trading houses, so to speak, and they can see sell orders and they can see buy orders, stop losses, stop buys in the market, and a systematic attack to target those orders. That does happen. I think that's a proven fact. I don't think that's speculation. So putting stop loss orders in there are all well and good. Sometimes if you're busy or you're away from the market, sometimes it's wise to do that, and that way you can just relax and don't worry about if you get stopped out. The market is never going to be completely fair, but it's pretty damn good. Okay, that's it for now, and I'll look forward to speak to you soon. Take care. Bye.